GM stock has fallen over 9% in early trading on Tuesday after the company reported a really great quarter in the fourth quarter of 2024, had good guidance for 2025. So what in the world is going on? I'm going to dig through that. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I'm going to go through some of the key numbers for GM, but I think the big picture takeaway here is that GM is growing, gaining market share in all of its key markets, including electric vehicles. They're increasing their margins, their sale prices are going up, their complexity is going down, so their costs are going down. All of these things are pointing in the right direction. At the same time, bottom right here, they ended with less than 1 billion shares outstanding, returned $7.6 billion to shareholders. They did not announce a new buyback today. I think that's one of the things that the market may be a little bit disappointed in, but they do have plenty of cash, generating a ton of free cash flow. So we'll get to what that buyback could look like in the future, but wouldn't be surprised to see if there's another big buyback, like the accelerated share repurchase program they announced in November 2023, if that comes out in the next few months or so. But overall, revenue up 9%, compounded annual growth rate of 10% since 2021. That was coming off those pandemic lows, so take that with a bit of a grain of salt. U.S. market share was actually up to 16.5% and 17.5% in the fourth quarter. So popular vehicles, and I'll get to some of their discounting, they're not discounting as much as a lot of their competitors. So they're gaining share and not discounting. That tells you that GM has the right products at the right prices. I think that's really key right now, especially as some of the other bigger names, including Tesla, start to lose sales in the US. That's to the benefit of GM. The EV portfolio, variable profit positive. This is, again, one of those kind of first steps. They're not profitable on each vehicle from an operating perspective, but variable profit positive. The advantage is they can be variable profit positive and lose money overall on these EVs. They make enough money selling trucks and SUVs that the business overall is positive. So I think we're just going to see steps in the right direction from an EV perspective over the next year or two. This is that disciplined incentives that the company is talking about. Incentives hovering right around 10% for their highest competitor. I think that would probably be Stellantis. Industry average is going to be 6-7% of total sale price. GM, much, much lower than that. And their average transaction price has remained at about $50,000 for the full year. So that tells you that they're making the right products. Number one in retail sales, number one in fleet sales, number one in full-size SUVs and full-size pickups. This is where the money is made in vehicles. Big trucks, big SUVs. They show some of these vehicles here, give some stats. Average transaction price up 5% from outgoing models. So they updated some of these models, and they have sustained a 67% market share in 2024 for these full-size SUVs. This is really the reason to own GM stock, is because they are so profitable with these massive SUVs, and there doesn't seem to be anybody stopping them right now. New SUVs, most of these are a little bit smaller, but they also have a little bit higher transaction price. This styling has gotten a little bit more aggressive with things like the new Equinox. Same thing with the midsize SUVs, these Buicks, selling extremely well. I think the styling is really what's working well for Buick. And then things like the Traverse, this was kind of an afterthought product. Now it looks a little bit more like the Tahoe. So that's going well. And then once you move to the EV side, again, progress, moving in the right direction, 12.5% market share, 44,000 units sold just in the fourth quarter. So they're the second biggest EV maker in the US. Now there's a lot of questions in the conference call about what happens in the future with EVs. A lot that we don't know right now. Is the $7,500 tax credit going to change? Are we going to have changes to mandates? Could that mean that certain automakers who are selling EVs at a loss are no longer going to do that because they don't have to have those compliance vehicles? A lot of questions outstanding given the new Trump administration. I think it's probably likely that the push towards EVs at least lessens a little bit. These companies know that this is probably the future, but how quickly is that future coming? That's maybe the bigger question. So again, if you have a company that's making money on trucks and SUVs, and that's where the real demand is, and you have to incentivize sales of electric vehicles. Remember, we saw Tesla actually decline sales even in the US in 2024. So that's telling you that maybe there isn't as much demand growth for electric vehicles as maybe the market thought it was a few years ago. Cadillac, I think, is one of the interesting winners in electric vehicles. The Lyriq is actually doing really well. I know Marquise Brownlee on YouTube talked about this recently. This is one of the more impressive vehicles that he had seen. And EVs are something that Cadillac is leaning into overall. So this is going to be something to watch in 2025. The autonomous vehicle strategy, this is what's really changed over the past few months. This is actually the reason that I sold shares of GM. Basically, the autonomous vehicle strategy was the upside, the asymmetric potential that I saw from the company, in particular their cruise business. When they shut that down, they said, hey, you know what? We're going to be making fully autonomous features for personal vehicles. I just said owning a value stock is not fit in the asymmetric portfolio. So that is why I sold shares. I still think this is a great company. And if you're looking for a value stock in the auto space, this is, I think, probably the one to own right now. But that's the reason that I no longer own shares in General Motors in that asymmetric portfolio. But they're moving into Super Cruise, into more and more vehicles, getting into more hands-free products. They're moving towards that subscription business as well. They had 3 years that were initially included for Super Cruise with a number of different vehicles. That's now moving to, hey, you got to actually pay for this. Not very expensive, but they're having a pretty good adoption rate of about 20% for their subscription model. And you add all that up, and here's where you get to the 2025 guidance. This is what I think ultimately is really impressive. A lot of thoughts is that GM is in trouble as a company. That doesn't bear out in the numbers. $13.7 to $15.7 billion in EBIT adjusted, earnings per share adjusted $11 to $12. So again, this is a stock that's trading for less than $50 and you're getting earnings of $11 to $12. So less than a 5 price to earnings multiple. Adjusted free cash flow from the auto business, 11 to 13 billion. Those margins, very, very strong. CapEx continuing, that's even after their free cash flow. And I will say that this does not assume any changes to tariffs or policies or things like that. So there could be headwinds or tailwinds for GM in 2025, but it seems like management's still expecting things to be pretty good throughout the year. And this is, like I said, a great value stock at this point. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So why is the stock down almost 10% in trading on Tuesday? I think really the market is just worried about what's going to happen with tariffs, the uncertainty around electric vehicles. The market doesn't generally like uncertainty, but what we know is that management has been very aggressive buying back stock when there's opportunities to do that. They see a lot of positive free cash flow coming from the business. And I think this is really one of the best run automakers in the world right now. And you wouldn't know that given the price. Price to earnings multiple of under 5 means that management can continue buying back shares with their free cash flow. They could buy back about 20%, more than 20% if they would like, of their shares each year, given the fact that the stock's not going anywhere. So I think that's really the upside for investors, is that management just continues to operate this business extremely efficiently, continues to buy back somewhere around 20% of shares outstanding. That should, in time, push shares higher. We have seen that over the past couple of years. I had a nice gain in General Motors in the asymmetric portfolio, even though Cruise did not work out well. But it was a good gain because it was buying value, limited downside. And so even though that upside of Cruise didn't quite work out, it was still a win overall because they were buying back shares at such a rapid rate. So I'm going to expect that to continue in 2025. I think this is actually a pretty good buying opportunity given the value and given how well GM is performing today. But the market obviously thinks differently. But let me know what you think in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.